Good morning, everyone. Thank you for joining us for a webinar on funding options for businesses in the time of COVID-19. It's Tuesday, the 14th of April, and I'm your host, Atef Baig. I'm one of the project managers at the Chamber. We're joined by our two guests today. So we've got Adam Horey, he's a partner at PwC, and we've got Adrian Mahon from TVCC. He's the Business Alliance Manager. So what I'll do, I'll hand over to you guys. I'll unmute you. I know that you guys have been working in the background, and you'll both be working together to deliver the webinar today. So Adrian, if you can facilitate and control, and what I'll do is anyone who's online, if you have any questions, please use the Q&A, the chat facility. Send any questions and I'll address them to the speakers throughout the webinar. So over to you guys.
Morning, Adrian. Do you want me just to kick off?
So Adrian, I think if you unmute your mic, please. Adam, if you'd like to start, I'll work with Adrian to unmute his mic.
Sure. Okay. Morning. So I'm going to touch on the three government funding schemes that have been announced to date. I'm going to focus on one of them, the CBILS scheme, which is focused at the SME community. I'll also touch on some of the tax initiatives and local authority grants that have also been announced. So the three schemes that government has committed to, the first one is the the COVID-19 Corporate Financing Facility, the CCFF. This is essentially aimed at larger companies, probably around the FTSE 250 mark, that have a credit rating. Then there is the Coronavirus Large Business Interruption Loan Scheme, commonly known as CLBILS, and that is focused on businesses with a turnover of 45 to 500 million. And then there's the Coronavirus Business Interruption Loan Scheme, commonly known as CBILS, and this was the first scheme to be announced along with CCFF, and this is aimed at supporting SMEs with turnover up to 45 million pounds. It covers a range of financing products and provides loans to borrowers from £1,000 to £5 million. I think it's important to remember that the scheme is aimed at businesses that can prove or evidence that they've been impacted by the crisis, and that impact is temporary, and that prior to COVID-19, the business was trading well and was a viable lending proposition. The loans, as I said earlier, £1,000 to £5 million, and the tenor of those loans is from 3 months up to 6 years. The first 12 months of that loan is interest-free to the borrower. So the government will provide or pay the interest on behalf of the borrower to the lender, and there are no fees charged by the lender for this facility. There's been quite a lot of noise, certainly about 10 days ago, around personal guarantees. For facilities under £250,000, there is no personal guarantee. For facilities above 250k, original criteria said that it was at the lender's discretion, but there's been a significant amount of bad publicity relating to this, and most lenders have now waived the requirement for personal guarantee, certainly the large UK commercial lenders. And principal private residences are excluded as a source of security. So in terms of eligibility for a loan under this scheme, the lender can have, the borrower turnover is to be no more than 45 million per annum, and its primary activities have to be based in the UK. Or is open to businesses from all sectors except for banks, insurers, public sector bodies, and further education operators. The loan must be used to support trading primarily in the UK, and the borrower is not to have previously received any state aid. The process for applying is through the 40, I think it's now 44, originally it was 40, but now 44 accredited lenders with a lending proposal. Most of the lenders now have an online portal, but if in doubt, you should speak to your relationship manager at your bank. There's a number of areas that they want to see covered. Amongst those will be managing accounts and historical accounts showing that trading prior to COVID was fine. They want to see cash flow forecasting, both short-term 13-week and longer-term 12-month. They want to see details of the assets and understand what sensitivities you've applied to your cash flow forecasting, predominantly around if the lockdown is to be extended beyond 3 months, 6 months, 9 months. So I think that's the scheme in a nutshell. I think what's really important to remember, and as I mentioned earlier, lenders really want to ensure that the business is a viable prospect. If it were not for the virus, and that any lending is seen as an aid to help the borrower get through the lockdown period. If they can lend to you on commercial terms, then they will do so. It's only if they believe that the business has been impacted sufficiently that they will put you forward for the CBILS scheme. Other initiatives that are available to SME businesses, for businesses in the retail, hospitality and leisure sectors, there are government grants for businesses with a rateable value of between 15k and 51k, and they can benefit for a grant of £25,000 for all SMEs in any sector whose property is valued at less than 15k for business rate purposes. They are eligible for a grant of £10,000. Local authorities are responsible for distributing the grants through the business rate systems, although we are hearing that the local authorities are adopting different approaches. So there doesn't seem to be a uniform approach, with some local authorities being far faster to act and far more decisive in reaching out to businesses and providing those grants. But those, all of them, we've been told, have online portals on how to access those grants. There's also a number of HMRC focused initiatives. For instance, there's tax deferrals and rates holidays. So there's automatic VAT deferral for payments due from 20th of March to 30th of June 2020 will be deferred, and businesses will have until the end of the financial year to repay. Deferral does not include import VAT and or duty deferment, where formal time to pay arrangements will need to be agreed with HMRC. All businesses and self-employed people in distress with outstanding tax liabilities may be eligible for support with outstanding tax liabilities, including PAYE, due by 30th of June 2020. And other than the exception, or with the exception of VAT, HMRC expect companies to settle amounts of tax deferred by 30th of June or seek formal time to pay to agree instalment plans. And there is a dedicated helpline set up by HMRC where you can get more information and speak to a tax advisor on that. There's also been an announcement of business rates reduction, full rates relief for all companies in the retail, hospitality and leisure sectors. Companies that are eligible will benefit from a 12-month business rate holiday irrespective of rateable value. And then we've also touched on the cash grants that are also available. And then one that's been getting a lot of airtime is the coronavirus job retention scheme, commonly known as the SJRS. This was announced by the Chancellor on 20th of March, with updates on the 26th and the 4th of April. And SJRS is a grant to assist businesses cover up to 80% of their current wage level for employees who are designated as furloughed due to the coronavirus pandemic, provided that they remain employed. So in terms of eligibility, this is generally all employers who had a PAYE scheme and a UK bank account on or prior to the 28th of February 2020. The scheme is going to run for 3 months from 1st of March 2020, although we are expecting this to be extended. The conditions for the furloughed employees, the furlough should be for a minimum period of 3 weeks, up to 3 months, and they cannot work for the employer or an associated company whilst furloughed. However, they can undertake training during this period. Employees can come in and out of furlough as long as each period is for a minimum of 3 weeks. And the amount that can be claimed under SJRS is the lower of 80% of regular wages, or £250,000 per employee per month, prorated where the employee has not been furloughed for the whole month. Employees can still top up salaries above this level if they choose to. In addition, the costs of employers' national insurance and minimum pension auto-enrollment costs can be reclaimed. So there's quite a lot of information on HMRC's website regarding furloughing of staff, and if you haven't explored this avenue, then I would encourage you to take a look at what's on the website and HMRC's guidance on this. So I'll just pause at this point and see if there are any questions.
Adam, just one question, and thank you for what you've shared thus far. Did you mention 250,000 was the salary limit?
No, sorry, £2,500 per month.
Yeah. Okay.
Sorry.
Yeah. Also, Adam, how long must a business have actually been trading in order to qualify on the CBILS application status?
There is no guidance on how long the business needs to be trading, but what we're hearing are lenders asking for information on trading activity for the past 3 years. We also understand that businesses in a pre-profit stage are not eligible, so that might apply to fast-growing technology business, for instance.
Very good.
It's also there was also some further eligibility criteria announced last week that lenders are now looking at and saying that businesses are not eligible if the aggregate losses over the past 3 years exceed 50% of the share capital. So again, essentially what that means for a lot of businesses, that you need to have been fairly profitable over the past 3 years to qualify.
Mm.
Thank you for that, Adam. Adrian, did you have anything else that you want to cover off?
Not at the moment, Adam. No, thank you.
Okay, Adam, if you're happy with that, if you think you've covered off everything, I don't have any other questions that have come through on my end. So thank you very much for your time, Adrian. Thank you for joining us as well. Sorry.
Sorry, I was agreeing with you, Adam. Yes, thank you both.
Yep. Thank you. Okay, so just moving on to a few quick updates from the Chamber. We have been working very closely with the British Chamber of Commerce, businesses, and there is a link on our website. So if you are looking for further information, some useful links, some dates on upcoming webinars, do check out the Business Community Toolkit online. You can see the link on the screen. It's also on the homepage of our website. Also, to cover off the new membership model that we introduced at the beginning of the year in January, you can see the different tiers of membership on the screen. If you are interested in, well, all the non-members who are interested in joining, do get in contact, and existing members, if there are any questions, do get in contact with your account managers. Once again, thank you, Adam. Thank you, Adrian, for joining us. I'll end the webinar here, and thank you everyone else for joining. Thank you.
Thanks so much.